The wealthmanagement.com Advisor Innovations podcast is sponsored by LPL. As financial advice continues to evolve, LPL is at the forefront. Whether it's growing your RIA or building an independent practice, advisors can pick the business model, services, technology, and product mix that best meets their clients' needs. As a top wealth management firm 100% dedicated to advisor success, LPL looks forward to learning how they can help you build your tomorrow today. For information and show notes, go visit lpl.com/advisor innovation.
Hello, everyone, and welcome to the Advisor Innovations podcast. I'm David Armstrong. I'm the editor of wealthmanagement.com. And as you hopefully know by now, because I'm sure you're all diligent listeners of the Advisor Innovations podcast, this is the podcast that simply gives me an excuse to talk to interesting people in the wealth management space who are moving the industry forward in new and interesting directions. And today I'm thrilled to be joined by Colin Falls, the president of GeoWealth, an RIA-focused turnkey asset management platform. Colin, thanks very much for joining us.
Thanks, David. Really enjoyed being on.
It sounds a little strange to be talking advisor technology, given all the things that are going on in the world. And we were speaking to some other tech firms lately who do, have developers in Ukraine. And it realizes that, there's a lot of tech firms that, outsource a lot of their development to Ukraine. I don't know if you do or not. Is there anything that's going on over in that part of the world that's impacting you guys at all?
It's a great question. It's not, we do not have engineering or developers in Ukraine, but our engineering hub is actually in Sofia, Bulgaria, which is, it's obviously a NATO country, a couple of countries south of there. And so I wouldn't say, obviously, I think it brings it into focus. I think everyone's obviously focused on what's going on in the world. And I think realizing that people in that part of the world are being affected by this, and Bulgaria is not too far. It hits home. I don't think, to the point of obviously having engineers in Ukraine, but I think it's creating awareness that the world it's a small world at this point, and there is a lot of engineering talent, software engineering talent in Eastern Europe, and I'm sure that there are many companies that are in a similar spot. Maybe not in Ukraine, but in Poland or Bulgaria or Romania or others that realize how close to home this could hit.
Yeah, it's a fragile world, right? And I mean, we wanted to go a little bit into your background. I know you spent some time in Eastern Europe as a basketball player.
I did. I wasn't that far east. So I was, I played at University of Notre Dame and ended up going over to Europe for a few years. First in Italy, played for a year in Sicily. Ended up actually playing my second year in the Czech Republic and kind of Central Eastern Europe there. So familiar. And I was a couple hours east of Prague, and so understand kind of that part of the world and the effect some of the Soviet oversight had on that part of the world for a long time. And so, obviously thinking about, a lot of, former basketball players or former teammates have played in that part of the world and realize how good the people are. And so obviously this hits home a little bit more.
Yeah, that's great. Well, we wish the best for everyone over there. So for those people who aren't familiar, tell us a little bit about, give us the 101 on GeoWealth, turnkey asset management platform. Yep. Not brand new, been around for a while, but I think increasingly coming into prominence, or at least higher visibility. Tell us a little bit about who you are, what you do.
Yeah, absolutely. And, turnkey asset management platform is such an interesting term, and it's used in many, many different ways. And it could be everything from truly an in-house, corporate RA that's, calling their home office solution a TAMP, to third-party TAMPs that serve broker-dealers, to what we consider more enterprise software-focused TAMPs like ourselves. And so, across the spectrum, there's certainly different capabilities and feature sets that are extremely valuable. But at our core, we're a technology company. And so similar to some of the larger TAMPs and incumbents in the space, we've built all our own software. And so you alluded to us being around for a while. We've been around about a decade, a little bit over a decade. But when you go as wide technologically and as deep as we've gone, there was an extended R&D period. So, really from 2010 to 16, we were heads down building the first version before we went to market. And then really only recently in the last 5 years, we've commercialized it. And so we've had nice growth, but it's unique in that we've built all the technology ourselves. We're solely focused today on the RA market, which I think is unique. If you think about the broader ecosystem of technologies, if I had to simplify it, software as a service platforms have focused on the RA channel, and turnkey asset management platforms have focused on the broker-dealer channel. We bring a hybrid approach of SaaS and TAMP to the RA market, which is really our thesis and our differentiator.
And so tell me a little bit more about that, because I think for some of us, even in the RIA space, we have a hard time distinguishing, how would you characterize the difference between yourself and say your bigger, and I'll say rival, I guess, down the street there in Chicago, Investnet? I mean, how would you make the differentiation for someone who is evaluating either option?
Yeah, I would say it's hard to succinctly answer that question when they have so many different arms of that business, right? They truly have a SaaS platform, Tamarack. They have, a TAMP that serves the broker-dealer channel and their traditional TAMP. They have, now Money Guide Pro and all sorts of different other aspects. And so they're so broad that it's almost like, opportunity by opportunity, we can explain the differentiation. But I think, to be as direct as possible, they're a great company. They're serving upstream, very, very large institutions, whether that's, TAMPs broker dealers, $10, $20 billion plus, or on the Tamarack side, RIAs north of $1 billion. And they've certainly come down, below that, but it's not a focus of theirs. And, we're really built to bring the best of the SaaS technology capabilities and the efficiencies of the TAMP model downstream to kind of that small to mid-size RIA and small to mid-size corporate platform that needs more than just a SaaS technology, or doesn't want to go fully like an independent broker dealer and have everything run through the same chassis in a TAMP, and have the flexibility of kind of a hybrid model between software and outsourced services.
And there are others out there too, right? I mean, SEI, AssetMark, it's kind of a crowded space, I guess.
It is.
Yeah, go ahead, please.
Yeah. It's no doubt a crowded space in the broker-dealer channel. Like if you're a 20, 30, 40, $50 billion broker-dealer, you're exposed to all of these different TAMs. I think that if you look at it, though, and you look specifically at the RIA channel, they haven't gotten the uptake or penetration. And I think it's because they're selling more asset management solutions to the broker-dealer channel, where we view our differentiation and capabilities that we're actually selling software infrastructure to RIAs. They don't want to be told what to do in the asset management side. They want to keep control. And so our role in that is certainly we're acting as a TAMP, but it's advisor driven. And so I don't think that there's a lot of focus or saturation for a SaaS TAMP hybrid in the RIA channel that's giving the advisor control to run the business the way that they want to.
So what would you consider the sweet spot for a GeoWealth user in the RIA space?
Yeah, and the hard part about that is no RIA is the same, but I think if we had to, it's under a couple $2 billion, and it just depends on the makeup of the firm. Our largest firm, I believe, has $4 billion with us, and so we do have multiple firms north of $1 billion, but I think our sweet spot is really more business model driven than it is necessarily size. And so firms that are have many IARs, have lots of accounts, are using model portfolios, have a focus on, client service and marketing, and not on putting their technology stack and outsourced operations together, is where we've had the most success. And so it's less about the size of the firm and more about, kind of how they choose to run their business.
So you're looking for advisors, or advisors who might be a good fit with GeoWealth, or advisors who are really kind of outsourcing that back office functionality and focusing more on client service.
Absolutely. And I think it lends itself to firms that have a very strong foundation, what their client service model is and what their target market is. And oftentimes, I think it's unique in the RIA channel that they're actually investing in marketing. And these firms are growing very quickly organically, which is, pretty consistent across our client base.
So I think you had some statistics somewhere that I came across that firms that are using GeoWealth as their TAMP are growing faster than the industry average. Is that a study?
They are. Yeah, there is. And I don't have that updated. It was from last year. And I think, broad strokes, it was something along the lines of, our 10 largest clients had grown from $3 to $10 billion roughly in a short period of time. I forget if it was 24 to 36 months. But I think what that indicates is, sure, the market's been good the last few years, but it hasn't been that good, right? You haven't seen, 3x growth in the market. And a lot of that's driven by, again, these firms with a dedicated service model and marketing function that are growing faster than your average RIA. And what that means also is that they need an infrastructure that scales quickly, where they're not they're not focused on scaling up billing or trading or reporting. They're focused on the client onboarding experience and servicing the clients. And so, we view, and I think we're going to continue to do more research and putting data together around that. But, in general, it lends itself to a faster growing firm.
So for years, the idea was that the breakaway broker, right, the broker who left the broker-dealer channel to set up their own RIA, did so because they wanted to offer investment solutions that weren't available through the broker-dealer channel, or where they were too limited in the broker-dealer channel to offer those investment solutions. But they still all kind of fancied them, not all, I shouldn't say all, but many still fancied themselves as primarily asset management focused advisor, where they kind of led with investment management as their value prop with their clients. We're seeing that change. And I think what you're suggesting is you're kind of riding the benefit of that change a little bit. You're not necessarily going for the advisors that think of themselves as investment managers first and foremost, but rather advisors who think of themselves as client service or businesses first and foremost.
Yes, but there's also exceptions to that. And so I think, part of that is segmentation. It depends, the size of the firm and what their model is. Are they a corporate RIA or are they a smaller, mid-sized independent firm? But in either circumstance, there are definitely many scenarios on our, of users of our platform that they have their own investment management thesis and they have their own philosophy and they want to create models their own way. We're agnostic to that. Whether you use a third-party marketplace that we have available, whether you create your own, our value add is integrating that in a place where you could scale it efficiently, where you're not focused on those other things, the trading, the reporting, the billing, the aggregation. And so whether, I guess we're agnostic to the investment process to this point. And whether you use a third-party marketplace or your own solutions, we're still a very good fit. And we have scenarios of both, and we see both sides growing very quickly.
Okay, I see. So could you break it down a little bit for us in terms of the RIAs on your platform? What percentage are using their own models and using you to implement them, or what percentage are using the models off of the platform?
Yeah, broad stroke, of our assets under management, which, I think our 1231 is going to be about $8 billion. About half of those are advisor managed and the other half are third-party solutions from our marketplace.
Okay.
There's a good mix.
And for the third-party solutions on your marketplace, what do those look like? I mean, is it a broad marketplace there? I mean, I know you're with some of the larger asset management firms. What if we looked at that list, what would we find?
So it's narrower, and that was done purposely. We didn't want to overwhelm our advisors with options because ultimately a lot of times they're coming to us looking for recommendations, and it's hard if you have 12 large cap managers to recommend, one of them. And so I think that will evolve for us. And so right now it's primarily a suite of ETF and mutual fund managers with a handful of SMAs. We actually just brought in a new head of asset management in the fourth quarter to run that division, which for us, we haven't invested as much in, and we plan to in the future, to really build an investment consulting arm to help advisors if they want it. And so I'd expect that to expand significantly, really in all facets, whether it's ETF managers, mutual fund managers, modular portfolios, thematic ESG type solutions, but also significantly expanding our SMA solutions. And so we're never going to go to the point of having 4,000 managers on the platform, but instead of having a few dozen, I could see us getting, to 100 or so, in pretty short order.
It strikes me, and I have no idea if this is on the roadmap or if you're planning on doing something about it, but I would be interested in knowing, in your data set there, you could easily compare advisors who are running their own investments versus the performance of advisors who are running some of the, I guess, for lack of a better word, professionally managed asset management portfolios, and see, who is doing better. Right. And I bring that up. I bring that up only because the thesis is that, independent advisors, great with their clients, great customer service, very much relationship oriented people, love the kind of the financial planning aspect of what they do, but probably shouldn't be juggling the knives of portfolio management. I know not all of them, some of them do, but the idea is that, leave the investment management to the investment management professionals, and the advisors should be doing what advisors do best.
Yeah, look, I generally agree with you on that, but I think we're also agnostic because some advisors view that as their value proposition. And if they have strong conviction on managing money a certain way or having certain exposures, we don't want to be in their way on that. And I think that philosophical standpoint, we are modern portfolio theory, and we're going to be more strategic asset allocation, but we support all comers on this, right? And so, back to kind of your comment on could we compare strategic asset allocation versus tactical managers versus advisor managed portfolios? We could. And I think that we could broadly generalize themes, but I think we'd stay away from trying to, compare too closely, especially because when you think about things like suitability, how clients, are profiled to different risk profiles, is there dispersion from their composites because of extenuating circumstances? All of those types of things, come into play when you have such a large data set. And we have 125,000 accounts on the platform. And so I think that there's themes that we could understand. But, at the same time, I don't view a world, especially in the independent RIA channel, where everyone's going to do everything the same way, that everyone's going to use a Vanguard passive model. I don't, that's not why they became independent. Mm-hmm. And as much as I think they should be focusing on the service side and being in front of their clients, being, aware of the markets and having a point of view on it is part of the job description. And so I don't see that changing.
Yeah, and you're totally right. And I could even see a scenario or a thesis where the pendulum is swinging back in the other direction, right? Where, as more and more advisors kind of begin to peddle these sort of bland Vanguard buckets of ETFs, not differentiated from one another, an advisor could stand out from the crowd by offering a unique investment solution, and this gets us into maybe ESG or direct indexing kind of things. Any thoughts around direct indexing or ESG investing, where that's going, how advisors react to that? I
around what I considered I call it tech-enabled SMAs, right? And because if you think about it, what all of these firms are doing, and there's some really good companies in this space, whether it's tax, whether it's custom indexing, whether it's ESG, there's some notion of taking an SMA and using technology to affect the portfolio, right? Whether that's allowing for tax efficiencies, whether that's allowing for preferences and factors. And so technology is playing a role in it. I think from my standpoint, the gap in it is the ease of execution right now. And if you think about all of these companies, and you can name them all, you're going to their ecosystem, whether you're using a SaaS platform or using a TAMP, you're often going to an independent ecosystem or silo to invest in these different channels. And I think these channels are going to continue to be very relevant. Our view on this is, how do we take the best of their technology and their capabilities and integrate them into our solution where you don't have to leave? And so that's going to be our focus. And, we're going to be announcing a tax partnership or a tax technology integration in the second quarter. And the idea is you never leave our ecosystem. And I think that there's going to be enormous value in that. And it'd be naive of us to ignore the custom indexing or the ESG. And so those are all going to be on our roadmap. And it's going to be a function for us of, build, buy, or rent. And I could see us doing different things in different kind of channels there. They're all going to be relevant, but backing up, I do view that to be a higher net worth investor than is the traditional user of a TAMP. And so I still believe our core business, where the end mass affluent client is going to be using more model portfolios, similar to what's available in the industry. And I think these will be more a la carte based on higher net worth clients.
Okay, but you still have them on the roadmap, at least in some degree. And it sounds like your idea is to somehow bring them underneath the umbrella of GeoWealth, as opposed to sending the folks out to another solution.
Yeah, I just think you lose scale and efficiencies when you do that. Think about if you have to have 20% of your book of business at your tax technology SMA, and you have to have 20% of your business at your, custom indexing. And there's certainly some crossover between those. If you can have it still in your central operating system and get the same solutions and value, that's our vision and view of it. And so first for us is tax, I think custom indexing ESG will be kind of next on that roadmap. And they're intertwined, obviously.
Yeah, that's great. There's no names of any potential acquisitions or partnerships that you might be thinking about yet?
Not on acquisitions. On partnerships, there are. Can't announce it yet, but excited to announce it here shortly.
Okay. Yeah, I guess there's an access. We know the recent $19 million funding that just, I guess, was a couple months ago, last year.
Yep. It was fall in November, I think it was announced. November of 21.
Yep. So raised $19 million, and that's And I guess that's one reason why I say, you guys have been around for a long time, but only recently kind of becoming a little bit more visible. Prior to that, you had a single investor, right? A family office in Wichita, I believe.
We do, and they are still the majority investor. They own the significant majority of the business, and with their patient capital, we've been able to build, I think, a unique solution. And I think that part of it is, if you think about the history of build versus commercialization, you don't see many portfolio accounting systems out there, or UMA or sleeving capabilities, because it's really hard to build, right? And so there's only a handful of them, and then you see others licensing the different portfolio accounting systems. And candidly, that was, what we were building in the early years as we kind of identified the RIA market is where we wanted to operate.
Were you originally built for this family office?
No.
Okay.
The family office made an investment. Actually, they were incubating this idea of a fully, and obviously things, morph and change, but from a fundamental standpoint, it stayed similar. It was to build a single integrated ecosystem to serve the financial advisory market. And I don't even think the idea back then of like SaaS versus TAMP was really contemplated. It was more, could you build an integrated ecosystem where an advisor ran their book of business? And we went live in 2010. Actually by investing and acquiring an RIA that was a wholly owned subsidiary until 2017 or 2018 before we divested of them. And so for the first 7 or 8 years of our existence, we had live clients, live dollars, advised, 40 plus advisors by the end of it. And we were getting real feedback. And so we were able to grow that firm from $150 million to a couple $2 billion before we divested of them. And it allowed us to, I think, really get to a V2 of the platform and a solution that was market ready by the time we started attracting, independent clients in 2016.
So what are the plans for the 19 million? What do you plan on using that money for? Is it going to be more technology build out, maybe marketing? Where does the money go? I know you've been making some hires recently.
Yeah, so great. It's a great question. We did our Series A round about 3 years ago, and we had invested in technology and operations to that point up until the end of 2018, and really had no marketing or distribution function. And so, as part of that round, we started building out that capability. And really, this recent round, the Series B round, is an acceleration everywhere. But if you had to break into two primary categories, it's distribution and product. And so, on the distribution side, we've hired very quickly. We have an 8-person distribution team that's all in place. That was all in place at the beginning of this year. And so the idea is to get the word out and interact with more advisors. We're ramping up our marketing. We're dealing internally. Our marketing spend this year will be 4 or 5x what it was last year. And so on the distribution side, it's building a brand, being exposed to more advisors, and really being aggressive about market share. And then the other half of kind of the use of proceeds is product. And so I alluded to part of that being building out our investment product function. And, it's never going to be the dominant capability in our business, but it's something we want to build out to support advisors. And so we hired a head of asset management, and Jen Wing will be, incrementally building out that team and building an investment consulting program for advisors. But the big spend on the product is the arms race to technology. And so, prior to the round, I think we had 30 in product and engineering. We're going to double that. We've already started to, and that never ends, right? If you think about the trajectory of the business, we're going to continue to invest in product and engineering because it's an arms race, and there's really good technology companies in the space. We've gone wide. We need to continue to go deep, and then we need to think about kind of the integrations on the fringes.
Do you have a balance between, you mentioned earlier, and it's very true, all RIAs are unique. Being a service provider to an RIA is not necessarily doing the same thing for another RIA, just because their needs are so different or can be different. The idea of scaling a business like yours across that landscape where there is so much customization and so much personalization, is there a balance there, and how do you approach it?
There is. And I think that when you start going, so generally speaking, model portfolios is what is creating scale and efficiencies in our business. And so a user that is using model portfolios in some regard is a good fit for us. And so that is how I think about going across the RIA market. When you start thinking about customization, there's different ways to run models, whether it's, dynamic models or, tolerance band models. But generally speaking, you could put technology around it to make that very scalable. I think that the bigger challenge are things like, custom portfolios for each client and custom indexing and, there's good technology out there to do it, but I also think that there's challenges that come with it for the advisor. They want to invest in, process. And there's going to be scenarios where every one of their clients have different portfolios or different, and so there's dispersion, and it's going to be hard to measure against, your standard model portfolio or standard investment philosophy. And so, companies are going to continue to push the limits there. I think that that's a good thing. I do think, customization at scale is kind of, the holy grail in this place. And I think they will incrementally move there. But foundationally, you could just use model portfolios as, kind of the foundational piece of how we, scale across the entire industry or across the RIA industry.
Yeah, that's great. Listen, Colin, this has been great. I think I've kept you a little longer than I intended to, but I really appreciate it. And thanks for the introduction to GeoWealth. Good luck on the future endeavor. We look forward to the future announcements and hope to see you in person on the road at some point here soon.
That sounds great, David. Thanks for having me on today.
And you've been listening to the Advisor Innovations Podcast. I'm David Armstrong. See you next time.
This podcast is sponsored by LPL Financial, a registered investment advisor and member FINRA SIPC. LPL Financial is a separate entity from and not affiliated with wealthmanagement.com.